I want to review some of the pros and cons of financing a manufactured home. First and foremost, yes, we can help your loan to purchase either an existing or a newly built manufactured home. These types of homes are becoming more and more popular as an affordable alternative to the more common stick built or site built home that we might be more familiar with. We can help with anything from a single wide, double wide, triple wide, modular, or even CrossMod. I want to note that there are some additional lending guidelines that are required for these types of homes, and I'll highlight some of those here in a moment. So first, what's a manufactured home? It's a home that was built in an indoor facility, delivered to a home site, and placed on a permanent foundation. Some people might mistakenly use the word mobile home to describe a manufactured home. Those two things are very different when it comes to financing. So first, if it was built before June 15th, 1976, it is a mobile home. We and most lenders out there cannot finance mobile homes. Now, if it was built after that date, after June 15th, 1976, it's a manufactured home, and it's built to the construction standards that HUD, Housing and Urban Development, set at that time. Again, the manufactured home is placed on a permanent foundation and is not meant to be moved more than once. The only time it should have moved is when it left the facility or the dealership, and then when it was placed on the home site. For financing, we can do all the same types of loans that you might already be familiar with. Conventional, FHA, VA, USDA, anywhere from 15 or maybe a 30-year term. But there are some additional guidelines or requirements for these manufactured homes. First, it's important to point out that manufactured homes are seen as a slightly higher risk for a loan and consequently have a slightly higher interest rate. So for example, if today's rates were 4% for your traditional stick-built home, the interest rate for a manufactured home purchase might be 4.25 or even 4.5. Again, these things vary and change from time to time though, but typically you can expect a slight increase on your interest rate when buying a manufactured home. So when you see that less expensive price point on a manufactured home in comparison to a similarly sized and priced stick-built home, please remember that your monthly payment might be more expensive. And that's because of the interest rate. And please don't think us lenders are picking on these manufactured homes, because condos also have a very similar pricing adjustment to their interest rates. Again, single-family home versus a condo, a higher risk investment, usually a slightly higher interest rate. Additionally, the home cannot be in a mobile home park. It cannot have been previously placed at another home site and moved to this new home site. And it also should be on a permanent foundation and or fastened with these hurricane straps or tie downs. Any kind of hitch or wheels should have been removed at this point. The home also must be detitled so that we can consider it real property. And lastly, full utilities must be present on the site and meet local standards. And again, can't be more than 10 acres either. So those are just some of the more common issues we run into kind of right out of the gate when we're trying to finance a manufactured home. So those are some of the more common issues we run into when we're trying to finance a manufactured home. There's a variety of guideline requirements that we have to consider based on the property itself and even the loan type. For example, there are different requirements if it's a single wide or if it's a double wide. And those requirements might be different if you're using an FHA loan versus a conventional loan. Ultimately, I might suggest that you reach out to a loan officer or local lender like myself to review your options and see if that property might be a good fit for you.